So this man is really mad, though, that he paid $5.50 and he got half the amount of beef or beans or whatever was in his crunch wrap.
Sure. Well, we'll see. But obviously a major beef there. We have identified that man. It turns out to be Alan Nuckman, a bullseye option cheap target strategist. No, I'm only joking. Alan, I'd be remiss if I didn't get your very quick take on that. I'm certainly old enough to remember other class action lawsuits against fast food powerhouses. I remember Subway, where one guy was complaining, hey, wait, this isn't a 12-inch sub. Where do you think these kind of things go?
In the trash. I'm not saying about the Taco Bell food. I'm saying about the lawsuit. Let's be very clear on that, because I don't want a lawsuit. So I think this just goes in the trash.
Got it. All right. Well, we'll see how that sorts out. In the meantime, we're looking at this economy, this market. I want to tip my hat to you, Alan, because in the middle of everything falling out of bed, you were as cool as a cucumber. You were saying, I'm still looking at underpinnings that look sound. Now, increasingly, much of the investment world has gone your way. So you're not so much a standout contrarian anymore. So what do you do? What do you think?
Well, thank you for noticing. The risk reward has shifted, and for me, that's all it was. I'm not trying to be the smart guy. I'm just not trying to be the dumb guy and ignore for the last 50 years the markets have gone up with two, major exceptions. So every time the market sold off, it snapped back, and we've set ourselves up one more time for another complete V recovery. So if we can get back to this high, and we're only 4 or 5% away from the all-time forever high with all of what's happened, that's very impressive. And it's about corporations earning money and maintaining margins. And you talked about the inflation. They've been able to raise their prices for everything across the board because people are willing to pay. And the reason for that is wages, believe it or not, over the last year have outpaced inflation at 5% versus 4%.
So let me look at this. I mean, if it's a V-shaped recovery, normally a lot of those are short-lived recoveries because as quickly as you went down, you go back up, and then it's over. Not all the time, but what do you see happening this time?
Well, you have to look at the big picture. I've been doing this for a long time, Neil, 35 years almost. Look at the big picture, look at the overall trend. Every time it's come back, it's rallied the distance of the drop on that old high. So that targets S&P 6,000, which is about 30% above where we are right now.
Wow.
We are back to the market conditions. I'm not saying they're going to be sustained, where you buy the dip. From 2010 to 2020, you bought the dip and the markets move higher. Let's look at the value of stocks. Stocks to the EPS right now, earnings per share for the stock market is about 19. At that previous high, we were at 22. So we're still 15% below as far as the value of stocks. So you mentioned in our lead here that, the jobs have maybe slowed, but we have to differentiate what's good for us and what's good for the market and the economy. So there are two different things. I think the Fed has gotten things almost exactly right as far as getting the markets to the conditions we have, and they want maybe a little bit of slowing of wage growth. Nobody else does, but that would make them feel better. And most importantly, I'm going to talk about the markets forward-looking. In 2024, earnings growth is expected to be about 12%. So that's a very, very strong number. And the markets are looking forward to companies continuing to profit and make money.
And that would be good for the stock market in the process, or so they hope. Alan, always good chatting with you. Thank you very much.
Thank you, sir.
All right, Alan Nuckman on all of that. Now to Brian Bredberg on what they're cooking up 12 minutes from now on the Big Money.